Maybe you are a newer or less experienced investor. Maybe you have only a few $1,000s to invest, and you're wondering about getting involved with penny stocks. And if you're a newer investor with a low bankroll to play with, I'm going to tell you a few points that are going to really help you out a lot. The number one thing that new investors do is that they average down. They'll buy a stock, it declines in value, and then they buy more of the same stock to try and bring their average price down so it doesn't look so bad on them. Do not average down. The professionals average up. When you buy a stock you think is going to increase in price and it rises, then you buy more of it because it's doing exactly what you thought. Maybe you have that call right and it'll just keep on going higher. That's what professionals do. The newer and more experienced or more inexperienced investors are going to buy a stock, and when it declines, even though what they thought was going to happen is the actual opposite of what's happening, they buy more of that stock to try and sweep their mistake under the rug a little bit. It's a mistake, don't ever do it. I also suggest that you scale in and out of your positions. If you have $1,000, you don't go and put all 1,000 into one stock. What you do is you buy a few $100s of it and give it a little time, about a week or two maybe at least, and think about your decision, see if you still agree with it, and learn more about the company. Then if you want to down the road, you can invest more in the company. If the company has gone up or gone down, you dollar cost average. Basically, you're buying a little bit over time, and that's going to make your buys a little bit less volatile. Your number one question is probably, how much money do you need to start investing in penny stocks? And I'm not going to put you through the thing I say every time to everybody and what I did to get out of a hole where I lost all my money within 2 weeks was paper trading. I talk about it so much that I'll just put it towards the end of the video so that if you heard it a million times, you don't got to hear it again. But the big question is, how much money do you need to actually start for real? And that number is really a tough thing to figure out. I could say, yeah, $200, $300. You could do that with penny stocks, yes. But you have to keep in mind that when you have a small investment amount to start with, there's a big commission. The commission is more of a weight to your trade. So if you buy a stock for $100 and you take a $10 commission on that trade, that's $10. And then if you sell and take another commission for another $10, that stock has to go up 20% just for you to break even. If it stays flat over that time, you're actually going to be losing 20%. So don't think of it from that perspective. If you don't have a lot of money, you can start by paper trading. But if you do have a little bit of money and you want to get going with the real thing, just like I did, just like everybody does, then look into a few things such as putting less per trade or waiting to have more money so that each trade's a little bit bigger and the commissions won't be as big a deal to you. And there's also Robinhood, a free trading app where you don't pay commissions. And we've gotten some pretty good reviews about that from subscribers of the peterleeds.com newsletter. People are saying it's a pretty good deal, so check it out. That might be one way to avoid the commissions. Another obscure thing, and I'm not suggesting you do this, I don't know you, I don't know what's best. You might want to go in with a friend. If you got $200, I got $200, put it together, decide what you're going to invest on together. And if you agree on it, that'll probably be a better investment than if you were just going it alone, because you'll think about different things. And you'll have more money, so the commission rate will be less per trade than otherwise if you were just going out on your own. Where you get your leads from for stocks to potentially invest in, that matters so much. If you're getting free stock suggestions, you're going on message boards, or you're getting free faxes or emails in your email, if you're getting that and you're acting on any of that, then you've already lost, and you'll come back once you've learned your lesson. But you don't invest in stock picks that you hear about for free. There's so many hidden motivations. A lot of the times, even well-meaning people, your cousins, your coworkers, they think they're helping you because you're interested in stocks, and they're telling you about a company that they know about because they want you to invest in it and make a bunch of money and be grateful to them. It's just that a lot of what you're hearing about was put in front of their eyes, and they might not even realize it, by a promoter or somebody who's trying to manipulate or drive up the price of the stock. A lot of times that's lipstick on a pig. That is dishonesty and lies trying to trick you into doing something or taking an action. No company needs you to invest in their shares for the company itself to continue to do well and do what it's doing. People don't understand that. If you see somebody telling you all about some great stock, if they're doing it for free, there's a reason they're doing it. And it's not to help the company, and it's not to help you. The number one tactic to being a good investor is to use stop loss limits on all of your trade orders. So if you buy a stock at $8 and it drops to $7.75 or less at any point for any reason, you immediately sell your entire position. You'll lose a little bit of money, of course, but that'll keep you avoiding any kind of calamitous downside that's going to be a lot more than the 4 or 5% that you just lost. But you live to fight another day. And sometimes when the stocks go the right way, they're going to go up a lot more than the 3 or 4% you have for your stop loss limit. They're going to go out 10, 20, 50%. And so if you invest in 10 stocks, and every one, if it drops 2 or 3% or so, depending on each on a case-by-case basis, and this is not trading advice, this is just an opinion of what I've done, that I've done personally for myself, then you'll take a little bit of losses on a few of the stocks, and the gains will probably be outsized enough to cover over all the losses that you took. That's the number one way to become a good investor immediately and quickly. Stop loss orders. And of course, like anything we talk about here today, everything has got a ton more materials and information on the peterleeds.com website so that you can check it out and learn more if you're interested. You have to also decide if you're going to be an investor or a trader. An investor puts a little bit of money into the shares and they want that company to grow over time, and that's when you make your money. As the company grows, the share price follows suit. Or if you're a trader, the fundamentals don't matter. You're just looking at technicals. So you're doing short-term swing trades, day trades, where the stock price moves within a couple of days or so, and it's a totally different game. It's kind of like comparing downhill skiing to water skiing. It's totally different, and you have to understand, choose to be an investor or a trader. I'm a combination of both just because I'm so involved in the market now, but I've always had better results and better long-term massive successes from investing. You put your money into a company, and as they grow and expand and build market share and become more widely followed, the share price almost always follows suit. A lot of times they'll get bought out by a bigger company when they start showing that they've got something that's working, and then if you're a shareholder, you'll get a little bit of extra money when they try and buy out the company. But if you're a trader, you're going to have to keep track of the trades on an ongoing basis during the day, all day long, and put a lot of time. And a lot of times, the trades, when they go badly, you're making and losing money on a faster clip, so to speak. If you're a day trader, totally different game, a lot more difficult of a game. And I do believe it's a lot easier if you're a new investor to be an investor rather than a trader. You can always get into trading and use it like I do to I find a good company I think is going to go up a lot in price for all the fundamental reasons that I look at. And then I'll check the chart and I'll use the trading chart, the day trading kind of stuff, to see is it a good opportunity or time to get involved with this company that I like a lot. So if you get a good company trading at a great price and you jump on it, then you're probably going to do okay, as long as you keep in mind that you're going to use stop losses and you do the work required. You do your own due diligence and you actually do it. Always invest in what you know. If you're an investor and you're a doctor, then you should be focusing more on medical components and procedures and facilities. If you are a gold miner, then you should invest in companies that are mining companies, because you can understand what's going on with a company in a way that the majority of other investors don't. So you'll see when there's value. You'll get involved in good quality companies at lower prices, and you'll know which is the best out of all the different competitors. Someone is looking at the industry from the outside, they might not necessarily understand that. So you have an inherent advantage just because you know what you know. And always do more of what works and less of what doesn't. So if you're trying to trade 4 or 5 different types of stocks, 4 or 5 different ways, whatever you're doing that's working, focus on that. And don't worry about all the other stuff. There's a million different ways to make money on the stock market. You don't need to find every single one. You need to find one of them. And then just keep doing it over and over and over again. Rinse and repeat. And master your emotions. The biggest losses you will ever take, and the most frequent losses you'll ever take, is got something to do with your emotions at the time. How you're feeling, if you're frustrated, if you're fed up with a company, if you're impatient, if you need the money quickly, if you're using money that isn't risk money, all that brings emotions into play. And if you're ever losing sleep over a company, or you're ever giving it stressful thought, that's not the right company for you. Even if they do well and make money down the road, you don't want to have to take on stress for the chance of maybe making some more money. What you want to do is be stress-free, know what you're doing, and that's why I'm always talking about learn what to do by paper trading. Keep track of an imaginary $100,000 on a piece of paper in real stocks, but it's imaginary money. And you just write down on paper, like literally, there's no program, no expensive stuff to buy, no software. Just write down on a piece of paper the stock that you would have bought and how much money you want to invest in. Then watch it for a week and see if you made any money. And it's $100,000 of imaginary money. So I'll say, yeah, I'll put $20,000 into this stock. And a week later, I'll say, oh, I thought I would have made money, but went down a bit, or vice versa. And you learn and you refine your strategy. That'll be the best way to become a great investor over and above using stop loss orders. This is the kind of stuff that we talk about at the Peter Leeds channel, at the peterleeds.com website. If you want any more information about any of this stuff, we've got plenty of free stuff to show you that you can learn more. A lot of free videos, all that stuff. So yes, subscribe. Yes, click the alert bell. Yes, grab your copy of the Market Manifest if you haven't already. And just let us know if you have questions. We want to help you guys along. This is not about trying to get you to help buy my Lamborghini. This is about me trying to help you, just like I wished I had been helped when I was in the position you're in when I was just getting started, because I got wiped out pretty quickly, pretty fast. I want to help you guys out, and that's what this is about. And I mean, some people get that, most people don't, because people don't necessarily do just nice things like that for people anymore, but I want to live my life like that more. So that's what I'm trying to do. I know that there's a lot of ways that the things I'm teaching you can help you avoid losses, especially if you're a new investor or a new trader. So that's what I'm going to keep on trying to do. And if you subscribe and click on the alert bell, then you'll be a part of that as we go forward.